This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices plunged nearly 8% on Friday to the lowest level since 2021, while copper, soybeans and other commodities also fell as China retaliated against U.S. President Donald Trump's aggressive tariffs. Safe haven gold was down for a second day, swept up in a broader market sell-off as major equities indexes plunged and recession fears swelled. Beijing put forward a 34% additional levy on all U.S. goods, hitting back after Trump announced a 10% minimum tariff on most U.S. imports, with significantly higher duties for dozens of countries including China.
Saudi Arabia's anger at Kazakhstan and other overproducing nations was the key driver behind a shock decision by the OPEC Plus oil group to open taps on Thursday and might not be reversed even if oil prices fall further, 3 OPEC Plus sources told Reuters. Saudi Arabia has been an aggressive supporter of production control to balance the market in the last 5 years as its budget requires oil prices of around $90 per barrel. Thursday's decision represents a major departure from those policies. For the past several months, Saudi Arabia has been pushing Kazakhstan and Iraq to improve compliance with production cuts, threatening to otherwise start ramping up its oil output.
Moving on to the top news in the energy sector.
The U.S. will hold an oil and gas lease sale in the Gulf of Mexico, as planned by the administration of former President Joe Biden, and will release a proposed notice of it in June, the Interior Department said on Friday. The auction of drilling rights would be the first under a 5-year leasing plan finalized by the Biden administration in 2023. That program planned for just 3 Gulf lease sales during the period, a historically low number that angered the oil and gas industry and drilling states. It is uncertain how eager energy companies will be to purchase leases in the Gulf, which the administration of President Donald Trump has renamed the Gulf of America, as they weigh sliding oil prices with the infrequency of sales.
Japan's ruling coalition agreed on Friday to curb gasoline prices to help cushion households against wider economic pain stemming from U.S. tariffs, while Prime Minister Shigeru Ishiba scrambles to speak with President Donald Trump. "It's obviously better to meet him in person," Ishiba told reporters when asked about the possibility of speaking with Trump. "But we're first trying to arrange a phone conference taking the circumstances into consideration," he said. He spoke after meeting with the leaders of major opposition parties to discuss policy steps to deal with the fallout from Trump's global tariff blitz, which includes a 25% levy on auto imports and a reciprocal 24% tariff on other Japanese goods. Next, we have the top news in metal markets. Prices of silver dropped over 8-week lows on Friday as concerns about demand for the industrial precious metal dominated sentiment due to recession fears stemming from U.S. President Donald Trump's slew of tariffs. Silver typically tends to move alongside gold, but industrial uses such as electronics and photovoltaics account for more than half of global demand, estimated at around 700.2 million troy ounces as of 2024, according to the Silver Institute Industry Association. While gold, traditionally seen as a refuge from political and economic uncertainty, has touched multiple record highs this year, silver has struggled to break through the 12-year peak at $34.87 an ounce it hit on October 22, 2024.
A wave of anxiety has gripped India's diamond polishing hub of Surat, as hefty U.S. tariffs threaten to undermine the country's gem and jewelry exports, putting at risk the livelihoods of thousands of workers. The United States, which takes more than 30% of the South Asian nation's gem and jewelry exports, set a 27% reciprocal tariff on it on Thursday, at a time when demand is softening in other key markets such as China, the Middle East, and Europe. Tariffs will hit hard the demand for diamonds in the United States and job losses look inevitable, at least in the short term, said Dinesh Navadia, chairman of the Surat-based Indian Diamond Institute.
We will now look at the top news in the agricultural sector.
World cocoa, coffee and sugar prices slid again on Friday as markets remained rattled by U.S. President Donald Trump's sweeping tariffs, especially after China retaliated with its own levies on U.S. imports. Trump on Wednesday imposed a 10% tariff on most U.S. imports and much higher levies of more than 50% on some countries, prompting a worldwide sell-off in stock markets as nations from Canada to China ready retaliation. Following this liberation, many trade flows from the most affected producers will now enter a labyrinth in order to find demand in other countries, said Rabobank in a report that warned the new demand will come at an efficiency cost.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.